Let's shift focus and let's talk about what's happening within the FMCG industry with the kind of inflationary impact that you're seeing on account of the rising input costs. Good monsoons, could that really reduce the inflationary pressure? And the slowdown that one is seeing in the second wave of the pandemic in the rural areas as well. How are all these data points likely to impact FMCG as a sector? Let's try and analyze all of that. We have with us Milind Sarwate from Increate Value Advisors, also Mayank Shah, category head at Parle Products. Gentlemen, good morning. Good to have both of you on the show. Milind, if I could start the discussion with you, because we are seeing a spike in prices of agri commodities, barley, wheat, maize, sugar in the last 1 month. How do you see this impacting FMCG companies?
Good morning and thanks for having me on this show. I feel the impact of commodity inflation will vary from company to company depending upon how strong the brand is. In stronger brands, the role of the commodity underlying the brand is relatively lower. But nevertheless, I expect that worldwide there is a huge commodity inflation. Right? The Bloomberg index, for example, is up 65% as compared to the last year. So overall, there will be a cost push which FMCG companies have been feeling, and they will feel more of it as they go along. The point is less on the supply side, as in the cost side, and I think the issue for FMCG companies is going to be more on the demand side, but more of it in your next question.
Absolutely. Mayank, if I could, pick up the same point with you, because, like Milind is saying, that the RM cost pressures, that's going to vary from company and company, and every company has a different strategy to try and battle it out. Given that the Q4 gross margins of most FMCG companies were under pressure because of the increase in input costs, how do you see this impacting FMCG margins as a sector going forward? Because there's only that much of a pass-through that most companies can undertake. Eventually, either, it's a call between volumes getting a hit or margins.
Yeah, so fourth quarter was difficult for most FMCG company as far as margins are concerned, and primarily because of the input cost. And, it would probably, our expectation is would remain, the same for some more time to come till we see, harvesting happening post this monsoon. Now, as Milind said that, it's not so much of supply side issue, it's more about demand side. And as you also rightly said that, how much is it that we will be able to pass on to the consumer? So while, there might be some cost that you might be able to pass on to the consumer, you may not be able to pass on the full increase in cost or input cost to the consumer, in which case you might have to absorb a bit of it, and the margin pressure or the pressure on margin would continue in the Q1. It's most likely to continue in the Q1. Now, the dilemma with most FMCG companies, especially food processing companies, is how much is it that they should absorb and how much is it that they should pass on? Because given the fragile situation of economy right now, fragile situation of demand, no company, and I'll maintain that, since last some time, no company right now wants to really, tinker with the kind of demand that they are getting or they are building up. The last thing that they would like to do is do something that can fizzle the demand, consumer demand. And that's the reason why I feel that, companies would try their level best to absorb as much input cost increase as possible and pass minimal to consumer. And that too, when I think, actually push comes to shove, not otherwise. I think till they are not, in a position, till they are in a position to, absorb the cost, they will try and absorb the input cost. It's only beyond a point that they would have to, really pass, or they would like to pass the input cost increase to the consumers.
Okay. Milind, our gross margins have been under pressure for most companies, in fact, in the last couple of quarters. Do you see a sharper contraction in margins going forward in Q1?
Yes, I think the pressure will be there. And as I mentioned, the pressure will be also because the revenues of the companies will come under pressure. The second wave has been really widespread in terms of both urban and rural. And I think at relatively flatter levels of revenue, the cost push effect will appear even larger. So I think gross margins will be under pressure. However, most FMCG companies have already rationalized their advertising and sales promotion costs. They have also used the COVID situation last year to bring about some structural changes in their costs. So I feel many companies have saved a huge amount of cost last year, and those buffers will come in handy. I feel there will be a flatness rather than a major reduction in gross margins. They'll tend to be on the lower side, but not really falling dramatically.
Sure. Okay. Mayank, to what extent do you feel input cost pressures can also be passed on at this point, and without impacting demand given the current scenario?
I don't think without really impacting the demand scenario, one would be able to pass on the input cost. There would definitely be some impact on demand. And that probably explains partially the resistance, among manufacturers to increase the prices. You would have, hardly seen any price hikes happening off late. Only in, a rare situation, some companies are taking price hikes. Otherwise, they are not really taking, as I said earlier as well. Nobody is right now looking at taking any sort of price hike because that's definitely going to have an impact on demand. Given the fragile situation of economy, given currently the likelihood or propensity of consumers to spend, even on essential items and FMCG, even on food items. So there's a little scope of really passing on input cost without really having any impact on demand. I guess maybe going forward, and as we all know that, the prediction of the monsoon is already out and we're expecting a good monsoon. Maybe, the input cost, and that's something that almost every food company today is hoping that, we'll have again a bumper crop and there would be some cooling off in terms of the input cost, which would help companies. But as we speak right now, I don't think there's any company who would really be, taking a price hike and would not be having any impact on demand. Almost everybody would have an impact on demand given the situation.
I wanted to understand, given that in the second wave, unlike the first, rural areas also have not been spared. Unlike the first wave, where you had rural actually leading the economic recovery, what is it that you suspect and what is it that you're hearing from your on-ground channel checks on what really is the state of the rural areas, and is the demand continuing to be much higher as opposed to urban in the rural areas?
Yeah, so as we speak right now, we have not seen any, impact on demand coming in from rural consumers or rural India. And there are 2-3 reasons behind it. One is the population density in rural India. It's not as high as that of urban India, which naturally isolates, rural India and is kind of a natural shield in rural India. So, because the population density is much lower, the rate of contraction goes down. Secondly, unlike, urban agglomeration or, the density which is there in urban India, let's say, even if one village gets, contained or there's high amount of contraction happening in one village and it gets into some kind of a lockdown, individually that particular village is not really a very big demand unit. Okay, unless you have swaths of, villages in one area being impacted by a contraction of COVID. So that way, I think rural, relatively is shielded. Thirdly, and most importantly, I think even if, the rate of contraction goes up, especially when it comes to food and processed food, I think the propensity of consumers at some kind of pantry loading, some kind of, buying in advance actually really helps. So, the lockdowns are not as stringent as that of urban India. And they're not even required, given the lower population density. And hence, the demand for food, at least, processed food, is not really getting impacted. That's what we have seen till now.
Milind, what is your own understanding on this entire rural versus urban? And given that this time around rural India as well has been touched by the virus, do you think things could be a lot different? And could we see a sudden dip in demand in the rural areas?
I tend to think on those lines. I'm a little less optimistic than Mayank is. And Mayank's company is into basic processed food, so he's right in his own way. But I feel if you look at the broader FMCG universe, there will be an impact of the rural spread of COVID. I think unlike the first wave, in the second wave, there is a real fear of death. And I think that is going to impact economic activity from time to time and from location to location. And I feel that the healthcare facility shortage is much more severe in the rural areas. And therefore, I feel the consumer sentiment is likely to be touched very badly. And therefore, the impact will be more on discretionary items, items at the topper end of the spectrum. There will be downtrading in FMCG, certainly. And packs which have a fixed unit price will be more prominent, the lower LUPs as they are called. And over there, the FMCG companies will feel the margins contracting the most because you cannot tinker with, say, a 10 rupee pack or a 5 rupee pack. So that is one aspect. The other aspect about monsoon or even about the harvest, the Rabi 2021 harvest that was extremely good. I think there have been some issues about the direct benefit transfer to individual farmer accounts. Earlier, the Adatiyas used to play a big role. They are playing a lesser of a role now, and therefore there is some bottlenecking. So the farm incomes also, while they have been good in the absolute accounting way, in terms of cash realization, I think there are issues which is being in rural India, especially the agri part. Secondly, as you get into sowing for the Kharif of 2021, there may be a labor issue. So I'm not so optimistic about there being minimal impact in rural areas. I think there will be an impact. At least the feel-good part is suffering badly. Uh, Monsoon, both IMD as well as Climate have predicted a good monsoon. That's a rarity. There being, and I sometimes get worried if there is too much of unanimity on a subject. So let's keep our fingers crossed.
Gentlemen, we'll leave it there. Thank you so much for joining us on this conversation this morning.